Hey everyone, John Kamisek from Market Taker. Just want to do a little recap what we talked about in my group coaching class earlier today. Now, if you haven't attended my group coaching class, I hope you'll join us soon. Love doing it. Do a lot of education, a lot of trade ideas, and a lot of talk about management in that class. But I just want to go over a couple things with a couple minutes I have here of a couple trade ideas we talked about earlier today. So the market's certainly moving significantly lower from the FOMC announcement yesterday afternoon into today. And we're looking at the spiders here on the daily time frame, the S&P 500 exchange traded fund, and we can see where I have that line drawn at potential support level. We're at a pretty significant kind of triple bottomish area here. So it's really hard to play this bearish at this point when you're sitting at a kind of a support level. But I also looked at a smaller time frame, which we tend to do every single chart we look at, looking at the hourly time frame. And we saw it's got a little pivot level, most recent pivot low about 433, and kind of a pivot low where the spiders gap down to today about 436. We looked at the options and we found a pretty decent IV skew for tomorrow's expiration and Monday's expiration. In other words, Friday's expiration had significantly higher implied volatility level option prices more than Monday, which is perfect for a long calendar where you're selling the shorter term at a higher implied volatility level versus the longer term, which was Monday in this case, with a lower implied volatility. So in other words, selling more expensive, buying a little bit cheaper. And we chose those two levels, selling the 436 level and the 433 level for the puts. So we did a 436 call calendar, selling Friday, buying Monday, and a 433 put calendar, selling Friday, buying Monday. You got them for about $1.04. So really the best case scenario is the underlying spiders moves up to 436 or 433 by tomorrow's close, right? And then we didn't want to be naive on the market as well, that it couldn't move lower. So I kind of went over to the Qs here, the NASDAQ exchange traded fund. And at the time, we're sitting at pretty decent potential support level, as you can see, right around that 360 level. So I said, we're going to keep an eye on this guy, but if it could break down a significant amount today, I like the bearish directional trade. And I chose a bear put spread. So we modeled out a 360, 355 bear put spread for next Friday's expiration, September 29th. We're long the 360 put, and we're short the 355. And at the time, we got in for about $1.75. And I said, all right, be a little bit patient on this one. Let's see if we get a little bit further breakdown as well. So then lastly, I don't have a whole lot of time here, and we looked at Microsoft. And we noticed that Microsoft, let me switch it here, was kind of rallying on the day. And the market was moving significantly lower. But I also found a pretty decent pivot level around this 330 level. Zacked as kind of support and resistance a couple times. And at the time, Microsoft was rallying up here. I said, you know what? Let's take advantage of this bullish move on Microsoft to take a non-bullish trade like a bear call spread, selling a call credit spread. And this 330 potential resistance level stood out to me. So we modeled out for next Friday's expiration again, September 29th, selling a 330 call and buying a 332.5 and brought in 65 cents or $65 in real terms. Now, certainly we talked about management in all these trades, which is the most important part of trading, bar none. So just want to drop a quick note for you to go over a couple trades we talked about. If you haven't joined us in group coaching, door is always open. I hope you do soon. Have a great rest of your day. Thanks so much.